Hey, what's up, everyone? Velez here. Thank you for joining me in the Velez Zone, where I seek a truth to use as a weapon against chaos and groupthink. So today, I really want to talk about the collapse of the US dollar. And really, the reason I wanted to start the podcast was because I've been seeing a lot of negative things going on in the world that aren't being processed correctly by mainstream media, our leaders, and even people. I mean, honestly, just go on social media and you'll see the division very clearly. And there's a lot of frustration from everyone, and I think we're all collectively too lost in the weeds on many of these issues, and we're really losing the forest from the trees. We often have a very tough time diagnosing the symptoms from the disease. Between the ongoing social issues, political division, weak economy, tensions with China, even coronavirus, clearly something is wrong here, and I think we're just seeing the cracks in a broken system. And I really think we're going to see not only the collapse of the US dollar, but also potentially the fall of the US as a global superpower in the future if we keep going down this path. And unfortunately, it's always the regular people like you and I who get burned during times like this. So really, my intention is just to educate and help you think through some of these issues and the unintended consequences so that we could position ourselves not only to protect our financial health, but also our freedoms as Americans. So whether you're young or old, rich or poor, black or white, left or right, or just somewhere in the middle, really my intention is just to help you get through this tough time. And so with that, before we get into everything, let's just first level set ourselves on what money is. So money is one of those things that we often take for granted. We expect that $1 today is going to be worth $1 tomorrow, but that reality really couldn't be further from the truth. In fact, if you know a little bit about economics, central banks control the supply of money using inflation, which they target for 2% a year, which means every year your dollars are worth less than they were the year before. And just to be clear, just because the money supply may be growing doesn't mean you see inflation in everyday life. Inflation is a complex topic that's a function of inflationary pressures like population growth, increased money supply, among other things, while technological innovation is extremely deflationary, which causes disparities in the prices of real things. This is partially why the cost of your flat screen TV has been going down over the past few years, while even getting better, while the cost of healthcare has been rising. But without getting lost into too much of a rabbit hole in the puts and takes of inflation, money really serves a few purposes. In practice, we think of it as a medium of exchange for goods and services, but money is really supposed to be a store of value. And in fact, it used to be when we had a gold standard, but that was abandoned in 1971 so that our country can continue to spend money that they don't have. Ironically, they still do that today, as do corporations and regular people just like you and me, which ultimately, if spending doesn't slow down, it creates what we call a debt bubble. But in theory, money has some definable characteristics. It's supposed to be durable, which means it's not easily destroyed. It has to be portable, for convenience, of course. It has to be divisible, which is why we have, different denominations of dollar bills. It has to be uniform, so we actually trust it. It has to be scarce, which means a limited supply. So, and just as a side note, someone should tell it to the Federal Reserve, right? I mean, how do you maintain the value of something that has an unlimited supply? The answer is you don't. And finally, which I think of as kind of as the glue that sort of holds all this together, is acceptability, which means that we all agree as a collective society that $1 is actually valuable. With the trust and understanding, without that trust and understanding, the whole system really just falls apart. With that, there are really three types of monetary systems. And for the purposes of this conversation, I'm going to exclude the barter system. And I'm also not going to touch too much on the potential of a fourth system, which is decentralized digital currency. But, given that it could be a good solution to our monetary issues in the future, I may do an episode about it later on. But right now we live in a type 3 monetary system, which is a global fiat currency system. Basically, that means that all of our currencies, whether you're in the US, Europe, Japan, or wherever, aren't actually worth anything. Fiat money is backed by the full faith and trust of your government, which is unsettling to think about and is actually against free markets. In fact, central banks are actually more socialist than capitalist. And I think crony or corporate socialism is probably the best way to think about this. And before all my listeners on the left go up in arms about this, it's really important to understand this concept because the US Federal Reserve is actually a private bank. The Fed is effectively the bank for all the big public banks, as in the ones we bailed out in 2008. It's not actually owned by the government. Now, granted, the Fed is only in existence because of Congress, and clearly there's a conflict of interest between Congress and the big public banks, but because they're so systemically important to society, and the Fed has the control of the money supply, they decide who gets the money. So if you just play out this scenario in your head, especially the implications during a crisis, you can see why a fiat system can lead to unintended consequences for the collective society. It's all about who has access to this unlimited money and credit. And spoiler alert, it's not you and me, it's corporations and government. So without getting off on a tangent, we used to have a hard money system that was based around the gold standard. The reason a gold standard or, for these purposes, any commodity-backed monetary system is good is because no central bank can create money out of thin air and give it to whoever they want. Also, the wealth you have today technically should be worth the same wealth you have tomorrow because hard money has a limited supply or scarcity. Unfortunately, though, it's tough to grow an economy with hard money because you don't really have access to credit. And this is really what led to our fractional banking system, where you technically, your banknotes or dollar bills actually represented that you own some gold in a vault or bank. Access to credit is great for an economy because it allows people, corporations, and government to pull forward their future income so they can create or buy more productive assets. And I would even say that proper use of credit leads to more growth, wealth, and productivity for everyone. So credit inherently isn't a bad thing. The problem arises, however, when you use credit to purchase liabilities. And just as an example, I think this is a really important concept to understand on a micro level because this is really how our economy operates. So imagine you earn $75K a year and you want to go on a $1,000 vacation. So you put the vacation on a credit card because you got to get those points. But really what you're doing is you're spending your future income. So you're pulling forward $1,000 of your future earnings to pay for the vacation, which I would call a liability. Others may call quality of life. But the important concept is to realize that the $1,000 you spent on the vacation eventually needs to be paid back by you spending $1,000 less in the future. And this is really where the economic cycle begins, because one person's spending is another person's income. In the case of the vacation, you're actually paying a business, and so their income goes up as a result of your spending, but their income will also contract in the future when you spend $1,000 less in the future. And this is exactly why we have expansions and contractions of credit in our economy. It all begins and ends with money and credit. This is not capitalism. This is actually how the central banks actually control this cycle. And so every 5 to 10 years or so, we see a contraction in credit because spending needs to normalize. And as a result, we see these little economic downturns. We think of this as the normal business cycle. So during an economic downturn, the Federal Reserve lowers interest rates to stimulate spending and ease credit because credit is good for growing the economy. But the problem is you're growing the economy but making debt cheaper to access. So over time, the little business cycles compound, debt continues to accumulate, and at some point, the Federal Reserve cannot ease credit anymore because interest rates hit zero. And this is at the point where we start having a debt bubble. And this is known as a long-term debt cycle, and it happens about every 50 to 100 years or so. And the last time we saw this was the Great Depression, which many of us can't remember because we weren't alive to witness it. And recency bias is, one of the reasons why we're so bad at predicting the future, because we put more value on things that happen in our lifetime versus things that happened before we were around. And some people might say, well, didn't we have one in 2008? Well, we did, but the problem was that the Federal Reserve prevented the bubble from resetting by implementing quantitative easing, which bailed out the banks and other financial companies. So we basically put a Band-Aid on the bubble. We left interest rates at zero, which allowed us to continue accumulating debt. And as a result, as soon as we were beginning to raise interest rates to tighten credit, the coronavirus hit. And talk about a spear to the bubble. And this is exactly where we're at today. And so you could tell, as you could probably already tell, I'm pretty anti-central banking. And over time, I actually find myself becoming more anti-government too. And it's not because I think they're out to get me or anything. I just think that most government is incompetent and inefficient. And I think they don't understand the implications and consequences of their policies and actions. It's just so nearsighted. And I guess this is what happens when, government's run by politicians and lawyers and not by people who actually understand anything about money and the economy. I'm still young, and if you know me, I feel like I've had a good exposure to different ways of thinking. I'm Puerto Rican, so I was born in Brooklyn, New York. So by default, I'm a liberal. And in fact, most of my friends I graduated with at Columbia are also very liberal. So my social media feed can become quite the echo chamber. But I think working as a trader at a hedge fund and then later on as a research analyst at an investment bank really gave me some perspective on how the other side thinks. And now as a small business owner, I actually find myself gravitating more towards libertarianism and wanting less government. Although I'm probably not as harsh as most libertarians. Maybe I would kind of consider myself a conscious capitalist. But nevertheless, our founding fathers actually didn't want central banking. In fact, I think most of them actually had some PTSD from Great Britain, being a monarchy and all. And in the late 1700s, there was actually a lot of resistance from Americans to central banking. And in fact, Alexander Hamilton was a proponent for the federal banking system. He thought establishing a national currency was the right thing to do. But if any of you have watched the play Hamilton, which is now on Disney Plus if you haven't checked it out, Thomas Jefferson, who was Secretary of State at the time, actually opposed a central bank. And I think there's actually a song about this in the play where the two are actually debating it. But regardless, Hamilton and the Federalist Party ended up winning, and they chartered the first bank of the U.S. in 1791, which lasted for 20 years until it was voted down. Then we tried to do it again in the early 1800s, and eventually President Andrew Jackson declared a national bank unconstitutional, which led to the free banking era of the 1800s, which was basically a shit show. Fast forward to 1907, after the Civil War, and a lot of these private banks were actually having runs on them pretty frequently, which is basically when everyone goes to the bank at the same time to withdraw money, and the bank doesn't have enough money to give you because they lent it all out. This is inherently one of the problems with a type 2 monetary system with claims on hard assets. The banks start lending out more than they have so they can expand credit, but if everyone wants their money back at the same time, there's a bank panic, and that's when you run into issues. So what do? Well, most Americans agreed this was no way to live. So Congress eventually established the Federal Reserve as we know it today in 1913. And here we are over 100 years later, still slaves to this monetary system, for better or for worse, right? On one hand, you have a stable national currency in the US dollar, which is a great thing. I mean, it's good for commerce. But on the other hand, it can lead down a slippery slope of abuse of power and misaligned incentives. And I think today we're really starting to see the issues of central banking and its neglect of regular people. But then World War II came, and we were ultimately the victors, not only from a military perspective, but also as a global economy. You see, at the end of World War II, all the countries involved established the Bretton Woods Agreement, which pegged all global currencies to gold in a Type 2 monetary system. But World War II was fought in Europe and Asia, which means that whether you were an ally or Axis power, your country was probably devastated from the war. Meanwhile, the US was chilling. Not only did we win the war, but hardly any of our infrastructure was destroyed. We had atomic weapons, and everyone owed us money, which is actually why we have a lot of gold in our reserves today. World War II basically ushered in this new world order with the US and its friends at the top, and everyone who has to play by our rules, aka use our dollars, which made us the global reserve currency of the world, which status we still have today. And just to give you some perspective, in 2019, 60% of all foreign exchange reserves in the world were US dollars. So almost 75 years later, the US dollar is still systemically important to the global economy. But that was great for Americans, right? Post-World War II was probably the greatest era of American prosperity ever. In fact, when we think about the American dream, literally everyone thinks about a strong middle class, right? Back then, working a 40-hour job can get you a house, a family, a pet, a car, maybe even a couple vacations. I mean, this is what every single politician today promises we're going to get back to. Yeah, maybe, but maybe the reason it's not like that anymore is a systemic problem because of too much government and not necessarily a problem with capitalism and corporate greed. And in fact, this all actually began to fall apart in the 70s. That's really when we began seeing the beginning of wealth inequality. Well, what happened? Well, in our hubris, America is the greatest civilization to ever grace this planet with its presence, right? So we thought we could spend money like it grows on trees. You see, we have this great privilege as the global reserve currency, but it can also be abused. And so what does our government do? Well, of course, they abuse it. Deficit spending hand over fist for social programs, the Vietnam War, and even going to the moon. And in 1971, President Nixon abandoned the gold standard and severed convertibility from US dollars to gold. And as a result, the US dollar and all other currencies pegged to it devalued relative to gold, which led to inflation and reduced the dollar's purchasing power. This is really when the world entered a Type 3 fiat monetary system. And in order to combat the inflation that Nixon created, Fed Chairman Paul Volcker raised interest rates to as high as 20%. If that happened today, asset prices and markets would absolutely crash with the contraction in credit. But that's exactly what needed to happen to fix inflation. And it worked. The only problem is that it led to the 1981 recession. But you see, for the past 4 decades, we've really been living in this disinflationary environment. And this is exactly what drives wealth inequality. And just to be clear, this is the direct result of the Fed's monetary policy. This is really important to understand. Most wealthy people have their wealth in assets, stocks, bonds, real estate, land, businesses, whatever. Most poor people have all of their wealth in cash. So when interest rates are high, it incentivizes everyone to save and not to spend because you can get a better return on your cash sitting in a savings account. That's your risk-free rate. But as interest rates lower, as we progress through the long-term debt cycle, right, ups and downs, expansions and contractions, it actually becomes riskier to save because you could generate a better return in assets like stocks, bonds, real estate, land, businesses, whatever. So as interest rates approach zero, asset prices actually inflate because your cash actually devalues because there's more money or credit entering the system. Over time, this makes poor people poorer and rich people richer. And this is exactly what we began to see happening in 1971. This is not capitalism. This is government. Again, I need to keep bringing this up because there's a massive misunderstanding on what is creating wealth inequality that we've been seeing over the past few decades. And going back to the graph of the wealth shares, if you're watching this on YouTube, the effect is obvious. In fact, it's even worse today. And I want to make a quick point about capitalism. When you're a quote-unquote greedy capitalist, it actually benefits society. Because in a free market, we only make money when we deliver an unbelievable amount of value to customers or clients. So as businesses, we actually have an aligned incentive with the consumer to provide the best product or service possible. Unlike government, where they get money allocated to them for these government social programs, but they could hardly care less if these funds are used efficiently. Because whether or not these programs actually help society, they're still getting their salary and they know they're not going to be in office forever. So they really don't have skin in the game. And I think we also need to acknowledge that, yes, some businesses can abuse their power with employees by not paying them enough, by not offering certain benefits, or just having a toxic work culture. But the beauty of capitalism is that you don't need to work there. You have options. You can leave, right? But for unskilled labor that doesn't have options, I think this is really where government messed up because laborers cannot unionize, and that's a government decision. In fact, underpaying employees in the long run, I believe, is actually worse for a business. When you pay people less and they're not happy at work, they're less productive and less creative, which results in a worse product or service that makes me, as the business owner, less money. I would even argue that overpaying for employees is probably the best long-term approach to build an aligned incentive structure. So not only is the business happy, but so are the employees and customers. And this is in theory. There are plenty of large public companies that understand this philosophy, that if you treat your employees great, customers get a better experience, and by extension, your business makes more profit. So without getting too off topic, for those of you who know him, I'm a big fan of Ray Dalio. He's been writing this book called The Changing World Order, which he's been releasing chapter by chapter to the public over LinkedIn. And the reason he's doing this is because he thinks that it's too important and relevant to today to not be read. And I really appreciate him as a thinker and a leader in this sort of space because he really does a fantastic job laying out some of these issues. And if you're finding any of what I'm saying really interesting or even frightening, honestly, I would seriously encourage you to read some of his work. He also wrote another book called Navigating Big Debt Crises, which I would also recommend for some historical context. And he lays out this beautiful story arc of the typical rise and fall of empires. And I can't help but see the parallels between his framework and what's going on in the world today. Just to recap alongside this chart, you have World War II, which was the beginning of this new world order with the United States at the top as the global reserve currency. We have decades of peace, prosperity, productivity, and debt growth. The roaring 60s. But when we began to see a debt bubble, it led to the abandonment of the gold standard so we can continue playing this game some more. But that consequently created systemic wealth inequality. Fast forward a bit, and we almost saw the debt bubble burst in '08. But through more government intervention, of course, we put a band-aid on the bubble and continued on our merry way supporting corporate bailouts. So here we are today in 2020, not having learned any of the lessons of our past and going full speed ahead to the other side of this curve. So, we have a household debt bubble of over $14 trillion, mostly of mortgages because somewhere down the line, we continue to believe that owning a house was the American dream. And at low interest rates, why not? But the one that really hurts people, and it really hurts people because it's just such a structural drain on personal income, is the student loan bubble that we have constructed. And I would also mention the ROI of university is just simply not there anymore. Not only because of egregious tuition costs, but also because wages haven't been growing. And I'm 100% going to do a separate episode on this in the future, and I really want to explain how this is the fault of the government, not necessarily the university. So please stay tuned for that because I have quite a lot to say on this topic. But moving on, we also have a corporate debt bubble, which surpassed the peaks of the last 3 recessions. You see, the same way we're addicted to borrowing, so are companies. And, they get even better rates, so who can blame them? Raising money for a company couldn't be easier right now in this environment. I mean, I literally saw this firsthand at the investment bank. My team would be very particular about banking deals we would do, especially in the cannabis industry, which I covered, because we wanted to maintain our brand leadership. But the number of banking deals I saw at other banks for cannabis companies were laughable. I mean, the shittiest cannabis companies could easily raise money in this current environment. And that's exactly what leads to issues like this. And it's even worse if you know anyone in the venture capital space. I mean, access to corporate debt has just never been this abundant before. And in fact, that access to easy capital is one of the telltale signs of a bubble. I mean, just think about 2008 with the mortgage crisis, where anyone under the sun could get a mortgage. This is what's happening today on an even larger scale. And if you think what happened in '08 was a problem, wait till you see what's coming. And not last but not least is the sovereign or government debt bubble across all developed nations. The global debt counter is somewhere north of $59 trillion, but what most people don't understand is that governments don't inherently have any money. They only get money from taxation. So when you see that the US has over $20 trillion in debt, they can only get that from us, from people. Or I guess in our case, our future selves technically pay for it, or our children through future taxation. But a country like Japan, which has a 2 times debt to GDP, I mean, that's ridiculous. That money has to come from somewhere eventually. And like all bubbles, it's only a matter of time until they burst, or in this case, explodes. And whatever your view is about the coronavirus, whether it's legit or not, whether we're doing the right or wrong things about it, that's not really the conversation. You and I cannot go back in time and tell our leaders and policymakers what to do. It is what it is. And what it is absolutely disruptive to our economy and way of living. I mean, even 4 months later in July, we're still seeing economic disruption, cases rising, deaths rising, ERs becoming flooded. And as a result, GDP was down 5% in 1Q, which really only captured a bit of March, but 2Q GDP is now expected to be down, I think about 35% or so last time I checked. And if that isn't an economic downturn, I just really don't know what is. And the media, of course, will say, oh, but the V-shaped recovery. And yeah, maybe if you lived in an alternate universe where policymakers took different actions and human psychology was different, but that's not the case. And I know this firsthand. As a small business owner, it's absolute carnage. People are losing their livelihood every day, and it's small businesses that fuel the majority of our economy, not these big public companies that everyone knows. And as these unemployment numbers that we're seeing, they really don't tell the entire story. I mean, we're already past peak 2008 levels, but these numbers don't capture permanent job loss. And the reality is that we're not going to know what that permanent job loss number is until the dust from all this settles in a few years. Just thinking this through practically as an operator of my business, my number one goal is to survive. If I have to rework my business to be more efficient so I can let some employees go and save my business, I'm 100% doing that. Now, yes, I understand PPP loans exist, which are really only going to help for a couple months, but every single business right now is rethinking its cost structure. And if there's any wiggle room to lean up and reduce expenses, you better believe that they're going to do it. And that isn't the greed of capitalism. That's just called desperation. That's called putting your oxygen mask on a falling plane before helping others. And I agree altruism is a net benefit for society when things are good, but in survival situations, it ends up becoming every man or woman for themselves. And now if this wasn't scary enough to contemplate, one of the biggest things that really caught my attention was this announcement from the U.S. National Security Council in late May, which I encourage every single person listening to read. I mean, it really reads like a declaration of war against China. And in fact, if you've been watching the news recently, our leadership has been engaging in this tit-for-tat escalation with China recently with the consulates, almost in an antagonistic way. I really don't know what President Trump and Secretary of State Pompeo think the best outcome from this is, but it really, really feels like they want war. I'm not going to read this out to you guys, but if you're on YouTube, please, I suggest pausing this and just read this paragraph for you. One of my favorite quote is, it goes on to say that the U.S. acknowledges and accepts their relationship with China as one of great power competition. And, but it's not like geopolitical issues are the only thing we're facing. We're having internal social issues as well. We're all over the place. On one side, you have the Black Lives Matter movement, which honestly is incredibly overdue. And I have a lot of black and brown friends, and I know for a fact that even as a white Puerto Rican, I get away with shit that they don't. To say systemic racism doesn't exist is just a lack of exposure. I mean, how could you expect black people to catch up to the rest of society after being held back from acquiring wealth, skills, and education for hundreds of years through slavery? The problem is that we're really bad at distinguishing the symptom from the disease. Police brutality is a symptom of systemic racism. And anyone who doesn't acknowledge systemic racism, just like systemic sexism for that matter, just doesn't have enough exposure and perspective. I mean, I went to an Ivy League school and my friends deal with this. And it's not just kids from the hood. Black and brown people get treated differently regardless of their education, income, or status. And then on the other side, you have people who think wearing a mask is encroaching on their rights as Americans, which is probably the most entitled or, dare I say, American thing I've heard recently. But, just thinking through it logically, in America, where we pride ourselves on our freedom, you can technically do whatever you want as long as you don't harm others. I think that's a pretty well understood statement. But these anti-maskers believe that they aren't putting you at harm when they don't wear a mask, which I'm sorry, I have to pull out the science card and call out your ignorance. Masks work. I don't know what alt-right bullshit study you guys read, but masks absolutely work. Just talk to any actual doctor. And to be honest, it's just a piece of cloth. It's really not that serious. If a piece of cloth over your face to save other humans gets you triggered, you have bigger personal issues to worry about. And then finally, we have people protesting to reopen businesses. And as a small business owner, I own a health and fitness facility in Brooklyn, New York. We're technically closed indefinitely, while many other higher risk businesses are open. I get it. It's frustrating. And in fact, I'm part of a coalition of gyms to actually sue the state so we can reopen. But I also recognize that it's a complicated issue. I know my facility personally could reopen in a safe way. And in fact, we actually definitely do more good than harm from being open because we focus on things like sleep, stress, and habits. But I'm not sure if other gyms can. So I understand why this is such a contentious topic. So clearly we have a lot of stuff going on right now. And everyone looks to the Federal Reserve for the solution. Because we set that precedent decades ago that whenever there's a crisis, the Fed needs to step in. And as a result, we're taking a whatever it takes approach, as quoted by the current Fed chairman, Jerome Powell. Say what you want about him, but there's a great line from Kanye West's song, Good Life, where he says, having money isn't everything, not having it is. And I really think that this is so relevant to right now, because people, businesses, and governments just don't have money. So our solution is just to hand it out. We printed $2 trillion in March, and the European Central Bank also printed over $2 trillion since this began. And the Bank of Japan and other central banks have followed suit. And that's not even mentioning the next stimulus bill that the U.S. is probably going to pass in the coming weeks once this one expires. But what everyone and even policymakers don't understand is that the U.S. Federal Reserve is actually the lender of last resort for all of these countries printing money. Because as you remember, the U.S. dollar is the global reserve currency, which is no longer backed by gold. And so every global currency is pegged back to us. And it honestly gets even worse because the US has these underground US currency liquidity swap lines with only its allies in case there is a US dollar shortage. And before March, we had swap lines with Canada, England, Europe, Japan, and Switzerland. But we've since expanded our swap lines to other countries in case there's a US dollar shortage. You see, the coronavirus and also geopolitical tensions have caused less trade globally, which means that the countries that own US dollar denominated debt now also have a dollar shortage because they're used to getting US dollars through trade. And when there's a dollar shortage, we, the US Federal Reserve, needs to step in and help out, or else their debts will default. And I'm actually going to do a separate episode on this in the future because it's just too important not to talk about. But without digressing too much, the end result is more US dollars in the world. In fact, the annualized growth of our money supply since 1981 has been above 6%, much higher than the Fed's inflation target of 2%. But we don't feel the effects of inflation as individuals when we go to the grocery store because most of this money is actually pouring into asset prices like your real estate and also stock prices. And so if you've paid attention to the stock market recently, you might remember the panic we had in late February, early March where the market sold off about 30-40%. It seemed every day the market was in a free fall. But it wasn't until the US Treasury market started selling off in early March that the Federal Reserve decided to step in and start buying up bonds. You see, the US Treasury market, which is basically the most liquid and stable financial market we have, started selling off a ton in early March. And just for those of you who don't know, US Treasuries are essentially government debt issued by the Department of Treasury. But a lot of foreign countries also own US Treasuries. And when the coronavirus really started making waves in March, a lot of countries began selling US Treasuries because trade slowed down and they needed US dollars. There was a shortage. This is really what caused the Fed to intervene and start buying back US Treasuries in March. And since then, the market stabilized and it's been off to the races ever since. But what most people don't talk about is that most of the outperformance is only driven from the biggest companies at the top. And this is true in the S&P 500, but even way more concentrated in the NASDAQ. So here are some stale numbers, but through July 3rd, the S&P was actually down 11% year to date. Meanwhile, the top 10 companies in the S&P were actually up nearly 10% during the same period. And this crowding effect near the top is even worse for the NASDAQ, where we're seeing companies like Facebook, Amazon, Google, Microsoft, Apple really disproportionately outperform relative to all the other companies in the index. And I heard this great analogy the other day on a podcast that likened this effect to the Titanic, where we are all collectively on this massive ship, the US financial market, and it's slowly sinking. Everyone begins running to the highest mast of the ship to stay alive. And this crowding is effectively creating a stock bubble. And what's frustrating is that these are actually good companies. It's not like the dot-com bubble of the 2000s where, garbage companies were outperforming. I mean, Amazon is essentially a monopoly and they benefit from COVID. But you have to ask yourself, if you're buying Amazon at these prices, realistically, what's your return going to be over the next 1, 2, 5, or even 10 years? I mean, is Amazon going to grow into its current valuation at some point in the future? I mean, I'm pretty sure it will, but the level of overexuberance in the market right now is at all-time highs. And a lot of this is unfortunately driven by Robinhood traders who are taking their stimulus checks and buying the NASDAQ hand over fist, thinking that the Fed is always going to be there to drive prices higher. At some point, that game is going to end. But while stocks continue to take off towards the moon because of money printing, the US dollar index, which just compares the US dollar against a basket of foreign currencies, has been declining since the recovery in March. The last time the US dollar was this weak was late 2018. And if you go look at the chart, this thing looks like it has a lot more room to go, which would be devastating on global trade for us because imports become more expensive. And as you know, we don't produce anything in the US. I mean, we really rely on imports. And the scary thing about weakening dollar is that there's really nothing we can do to reverse this trend. It's not like the Fed's going to just contract the supply of US dollars in the world. In fact, they're actually doing the complete opposite. And this has very real world consequences that a lot of people still are not ready for. And one of the most relevant consequences is, of course, higher prices of gold, which at around $1,900 an ounce is almost at all-time highs. And I just want to be clear, the rising price of gold is not only a function of a weak US dollar. That is just one side of the equation. there's also massive demand for gold. In fact, if you've been looking at the COMEX inventories, they've been stockpiling gold hand over fist in anticipation of redemptions of paper gold. And the last two times we saw this stockpiling of inventories, we saw massive price increases in physical gold. I'm actually going to do my next episode on gold specifically because I think it's so timely given the recent price action. And I know for a fact buying gold today is one of the most tactical things we can do as individuals to protect ourselves financially. And so, here we are as the United States, clearly on the other side of Ray Dalio's curve, with really only one direction we can go. And truthfully, I understand why we have to keep printing. The Fed dug this hole for itself in 2008. We could have used that crisis as a time to reset, but we didn't. And again, I want to reiterate, this crisis is a function of a lot of monetary decisions made decades, if not a century ago. The U.S. economy is like the Titanic, right? It's a slow-moving ship. The feedback loop for the U.S. economic policy takes decades to unfold. And without proper foresight and historical context, it's impossible to make the right decisions. I actually think government, and this is not specific to the U.S., I really think all governments all over the world are unfortunately run like public companies in the stock market. Except public companies manage their business for the quarter to appease investors. Meanwhile, government manages the country for the term limit to appease a specific voter base. So we actually end up spinning our wheels half the time and never make good long-term decisions. And so, as history would suggest, we're undoubtedly headed for a massive currency devaluation. We saw this with the Dutch guilder, Britain's pound sterling, and we've already seen this a number of times for the US dollar already. Now, are we going to see hyperinflation like the German Weimar Republic? Probably not. We are the reserve currency of the world, and we still have one of the, if not the most dominant militaries in the world. And I actually think our gross overspending on the military budget is probably one of the major reasons we get away with all this money printing. No country has yet been able to challenge us as a world power until most recently with China. And a part of me actually thinks that having the strongest global military is actually part of our nation's economic strategy, so we can maintain ourselves as a global dominant power. But regardless, we're clearly headed down a slippery slope. And I heard this great expression the other day. It was, show me your portfolio and I'll show you what you really think. And I couldn't help but think how relevant this was to central banks. As much as I shit on central banks for ignorance, they're not completely incompetent. In fact, they've actually been net buyers of physical gold since 2008, which I'm sure will continue, especially as this global crisis continues. And maybe even suggest that they understand that the fiat system is almost coming to an end and they need to hedge themselves by actually owning a hard money. So I know that was a lot to digest, and I really wanted to get into okay, so now what? What can we do as individuals to protect ourselves from this inevitability? And, this is not financial advice. This is merely just for education. But I wanted to bring up some tactical things you can do and start thinking about today to protect your wealth and insulate yourself from any future pain, if not even profit off this. The first thing we need to do is reconsider our asset allocation. All that really means is reassessing where you store your money. Maybe it's in a checking or in a savings account. Maybe you have some cash laying around. Maybe you own some stocks and bonds or have a 401k, or maybe you own some real estate or even a business. Understanding where your wealth and your money is currently parked is crucial to protecting it. And so at this point, what we're really contending with is a few issues, all of which have different timelines. You have the near-term stock market bubble, which will probably resolve itself within the next 6 to 18 months, maybe even sooner as the presidential election, if Trump loses, in which case I think valuations will recorrect through the corporate tax reform. But then you also have the risk of inflation, which is a slightly longer time horizon, probably within the next few years. But obviously this is such a moving target and things develop every day, so it makes sense to just be positioned as early as possible. In these massive currency devaluations, they're usually very episodic, meaning, one day everything seems okay, maybe a little weird, but life's still functioning as normal, and the next day your dollar isn't worth much. And so in the case of the market, if you already own stocks and bonds, now's probably a good time to be trimming your positions and locking in some profits. If you're not already in the market, maybe it makes sense to sit on the sidelines or even park your money in TIPS, which are Treasury inflation protected securities. I kind of like to think of them as inflation protected cash because it's still liquid, but you're not going to see any significant gain on the position unless inflation really starts to show itself in the CPI data. Otherwise, I really think you should be holding enough cash just for short to medium term living expenses. So maybe 3 to 6 months of cash would be enough. I mean, depending on your job security and situation. And then any other long-term savings that may be in cash should probably be moved into inflation protected assets. So gold, silver, tips, real estate, land, basically things that retain their value and utility over inflation during inflation. I would even say Bitcoin possibly is also a good option for this as well. Now, obviously, like during inflation, asset prices for real estate will crash, but owning a house still means you own a house, right? It actually has utility. People still value a house, and it could generate you cash. So maybe on paper, your wealth will decrease during inflation if you own real estate, but you still own that house. That said, it's important to realize that not every local real estate market is the same. For example, I'm in New York City, and it's very obvious that real estate prices, both for residential and commercial spaces, are about to contract because we're seeing, urban flight and also work from home culture starting to develop. So personally, I wouldn't be buying real estate just yet, but it's just something to keep in mind. Outside of that, I really think right now is a great time, if you have the capacity, obviously, to start a side hustle. I understand this isn't realistic for everyone, but it makes sense to try and productize yourself somehow. We all as humans have unique experiences, skills, passions, and perspectives that all intersect to create some type of specific knowledge that only you have. And I really believe that if everyone could build a product or service around themselves, and this is a big if you have a certain level of self-awareness. And I know this sounds like fluff, but just to give you an example of myself, I was always known as the guy who can deadlift a ton of weight in college. I spent a lot of time studying, strength training and nutrition in my free time because it was just a passion of mine. But later on, as I got older, I realized that I was also really interested in business and investing. And so I decided to open up a health and fitness facility, not as a coach, but as a business operator, because I had this unique overlap of interest for health and fitness and also business. So my point is that it's possible. Sometimes the answer is just right under your nose. And the reason I think everyone should at least consider starting a side hustle or business or whatever you want to call it is because clearly your jobs aren't safe, right? Not many jobs are safe right now in 2020. Unless you deliver an incredible amount of value to your employer and you can't be replaced easily, you're expendable. And like I said before, businesses are looking to lean up. If you're not a value add for your company, your job is severely at risk, which means your income is risk. And that's a problem. And so really my whole point is that, we need to try and build resiliency whenever possible in our life. And your job is just a perfect opportunity to do that. Aside from that, and this is personal finance 101, but pay down your short-term debt as soon as possible, meaning credit cards, personal loans, or anything that has a high interest rate loan. I would really encourage or urge you, any of you who have 401ks, to either stop contributing to it or just reallocate into more productive assets. So just as a quick example, my mother, who is near retirement, has some money in her 401k. And one of the big things we did recently was convert it all into tips. And the reason I did that was because we just want to protect that cash. We don't need it to grow right now for her. Her focus is on retiring, and having stock exposure right now is just, especially at these levels, it's just way too risky. I saw what happened to her in 2008. And unfortunately at the time, I was only in high school and I didn't know shit about anything. But seeing the amount of money she lost during that time not only gave me PTSD vicariously through her, but it also hurt her as well. She has PTSD. She does not want that happening again. So we just want to avoid another 2008 scenario. And believe me, when this happens, 2008 is going to look like a walk in the park, right? We're trying to preserve capital. And so I would highly encourage you all to reconsider your 401k allocation. And depending on your provider, park that money somewhere that's safer than it is now. Outside of that, we want to be as protectionist as possible, right? So try and reduce your discretionary spending as much as you can. I know it's easier said than done. That said, it should be easier for most of us to cut back on spending in quarantine. But my point is just cut back to a quality of life that that you're okay with. And lastly, I think a lot of this comes down to staying informed, remaining unbiased, and just being proactive. Mainstream media and politicians are not there to tell you the truth. They're there to make you feel better and more comfortable. The only person who's going to look out for yourself is you. And maybe, me, I'm looking out for you right now. But whenever you see these things on the news about the economy, just try to be critical towards it, but just not jaded. That way you can make better decisions about what's actually going on. And that's really all we can ask for ourselves. And so with that, just to wrap up, I think the US dollar is headed for a massive devaluation soon. We have this multi-tier debt crisis looming over not only households, but corporations and governments, which has just been blown wide open by the coronavirus and geopolitical tensions. And so as a result, central banks all over the world are printing massive amounts of fiat money, which is worsening wealth inequality, creating social tension, and putting the value of the US dollar at serious risk. You see, the US is the global lender of last resort. And with so much ongoing conflict, both domestically and internationally, we need to protect ourselves as individuals, meaning buying gold, silver, tips, maybe even Bitcoin. But we can also buy real estate, land, or other hard assets that will retain their value and utility over time. Fuck it. Honestly, I would even be stocking up on food, guns, and ammo. I mean, honestly, it definitely feels like that, right? If you're paying attention, it definitely feels like food, guns, and ammo are probably the things you should be focusing on right now as well. And in the meantime, let's just hold on to less cash and start thinking about diversifying our income by starting a side hustle or a business. And with that, if you've made it this far, thank you so much. I really, really appreciate it. I know this is probably more than you bargained for, but I really think this topic is so incredibly important to all of our futures that someone needs to be talking about it. And to be fair, there are plenty of amazing thinkers out there who also see this problem. And the more I research and look into these issues, the more I realize I'm not that insane. And while that gives me a sense of peace, it also is terrifying because it's the problems that no one ever sees coming that really end up doing the most damage. And I'm just afraid for everyone who thinks that this is just a bump in the road for the US, because it's not. We really need to zoom out and get some perspective and start taking action today to prepare for the worst. So that's it from me. I promise this is it from me. If this podcast brought you any value, or even if you just learned one thing, I would really, really appreciate if you could like, share, subscribe, comment. Just do what you have to do to wake more people up. Again, I'll have show notes on my website as well as slides you can download, and this will also be on YouTube and podcast. If you have any questions or follow-ups or even critiques, please don't hesitate to reach out to me directly. This is a learning experience for all of us, and the more we can exchange good ideas and try to uncover the truth, the better off we'll all be. Thanks for listening, guys. Stay out.